Let me introduce myself. I am CA Pravesh Agi. I completed my CA in 1985 and I am working as a visiting faculty with the Institute of Chartered Accountants of India and many management institutes and universities in Delhi and NCR. Currently, I am based at Gurgaon. So let's start with the question number 1. Miss Charlie, an American national, got married to Mr. Radhe of India in USA on 2nd of March 2017 and came to India for the first time on 16th March 2017. She remained in India up till 19th of September 2017 and left for USA on 20th of September 2017. She returned to India again on 27th of March 2018. While in India, she had purchased a showroom in Mumbai on 22nd of April 2017, which was leased out to a company on a rent of rupees 25,000 per month from 1st of May 2017. Now, she had also taken a loan from a bank for purchase of this showroom, on which the bank had charged an interest of rupees 97,500 up to 31st of March 2018. Now, she had received the following gifts from her relatives and friends during the 1st April 2017 to 31st of March 2018. From parents of husband, rupees 51,000. From married sister of the husband, rupees 11,000. From two very close friends of her husband, rupees 1,51,000 and rupees 21,000, totaling to 1,72,000. Determine her residential status and compute the total income chargeable to tax along with the amount of tax payable on such income for the assessment year 2018-19. Now let us solve this question. So we know that under section 6.1, an individual is said to be resident in India in any previous year if he satisfies any one of the following conditions. He has been in India during the previous year for a period of 182 days or more, or he has been in India during the 4 years immediately preceding the previous year for a period of 365 days or more, and has been in India for at least 60 days in the previous year. If an individual satisfies any one of the conditions mentioned above, he is a resident. If both the above conditions are not satisfied, the individual is non-resident. Therefore, the residential status of Miss Charlie, an American national, for the assessment year 2018-19 has to be determined on the basis of her stay in India during the previous year relevant to assessment year 2018-19. So we are talking here about the previous year 2017-18 and in the preceding 4 assessment years. So her stay in India during the previous year 2017-18 and the preceding 4 years have been calculated as under. Now, in the previous year, 2017-18, now we know that Miss Charlie had come to India on 16th of March 2017 and stayed in India up to 19th of September 2017, which means that in the previous year, from 1st of April 2017 to 19th of September 2017, she stayed for 172 days. Now, she came back to India again on 27th of March 2018 and which means that up to 31st of March 2018, she stayed for 5 days. So altogether, she had stayed for 177 days during the previous year in 2017-18. So now let us look at how many days she has stayed in the four preceding previous years. Now we know that Ms. Charlie has come to India for the first time on 16th of March 2017, and up to 31st of March 2017, that means she stayed in India for 16 days. Now she had come for the first time to India, so that means previous year 2015, 16, 14, 15 and 13, 14, she was not in India. So she never came back. She was never in India. So that means altogether in the four preceding previous years, she has stayed for 16 days. So the total stay of the assessee during the previous year in India was less than 182 days, and during the 4 years preceding this year was for 16 days. Therefore, due to non-fulfillment of any of the two conditions for a resident, she would be treated as a non-resident for the assessment year 2018-19. Now, let us compute the total income of Miss Charlie for the assessment year 2018-19. The first head is income from house property. Now, in the question it has been given that she had purchased a showroom in Mumbai on 22nd of April 2017, which was leased out to a company on rent at 25,000 per month from 1st of May 2017. So which means the showroom was remained on rent from 1st May to 31st of March 2018, and the rent was 25,000 per month. So that means the annual value will be 25,000 into 11 months. So it will come to 2,75,000. Now we have to reduce from this municipal taxes. Now she has not paid any taxes during the year. The figure here will be nil. So the net annual value will be 2,75,000. And we know that she is allowed reduction under section 24. So there is a standard reduction of 30% based on net annual value. So it comes to rupees 82,500. And she has borrowed some money on which she had paid interest for this property. So for that she has paid 97,500, which will be fully allowed. So the total deduction under section 24 would come to 1,80,000. So which means the total income from house property will be 95,000. That is 2,75,000 minus 1,80,000. Now let us calculate her income from other sources. Now we know as per section 56, gift received from non-relatives are chargeable to tax if the aggregate value of such gifts exceed rupees 50,000. Now in the question it is given that she has received gift from parents of the husband, that is rupees 50,000. So this would be exempt as husband falls within the definition of relatives, and gifts from relatives are not chargeable to tax. So there will be no tax on this gift. Then she received 11,000 from married sister of a husband, which is also exempt since sister-in-law falls within the definition of relative, and gifts from relatives are not chargeable to tax. So there will be nothing will be taxed here. Then she has received gift from two friends of a husband amounting to rupees 1,51,000 and rupees 21,000, aggregating to 1,72,000. Now this is taxable under the section 56 since the aggregate of 1,72,000 exceeds 50,000. So entire 1,72,000 would be taxable. So the total income including house property would be 2,67,000. So now let's have the computation of the tax payable by Miss Charlie for the assessment year 2018-19. Now the tax on total income of rupees 2,67,000 would work out to rupees 850, which is 5% of above 2,50,000. So on 17,000 we calculated 5%, it comes to 850. Now here we'll add education cess and secondary and higher education cess of 2% and 1% respectively. So that will come to 17 rupees and 9 rupees. So the total tax payable would be then 876